I'm Michael Fox, and this is the Prospector News Podcast. And I have joining me longtime friend, the editor of the Gold Newsletter and the host of the New Orleans Investment Conference, which are respectfully the oldest precious metals advisory in the world and the longest running investment event in North America. I've got Brien Lundin with me. Welcome, Brien.
Hey, Michael, great to be with you.
Yes, it's been a long time. We keep trying to get ourselves together to have these conversations, and they never seem to work out. But timing-wise, this is working out well. It would appear the precious metals are having a bit of a party finally, and are starting to break out. But I'd like to say that you're the piper of all of this, because I know you had two talks in Toronto, first one at MIF and the second one at the PDAC, and the gold price jumped almost immediately after you walked off stage at both of those.
Yeah, it was interesting. You know, at the MIF conference, I was the first speaker on the first day, and at least the first live speaker, and I went up and gave my presentation, and really the title of the presentation, or the whole thrust of it, was that a big run in gold is inevitable. And probably pretty soon, I would think at the time, I said some point within the next couple of months. And stressed, though, that the timing is the toughest part. Nobody really knows, but I think it's close at some point within a couple of months. Then I got off the stage, looked at my phone, and gold was up a little bit. Talked to a few people, looked at my phone, gold was up more. And it just started taking off. And I finally told somebody, I got to go up to my room and write an alert for my subscribers. And at that point, it was up $40. So, it did seem to coincide with me stepping off the stage and delivering that presentation. I don't think I can credibly claim credit for this bull run in gold, but I think you can certainly claim that I have credit for it. So go right ahead.
I'm certainly fine with that. I personally, I thought you misspoke at MIF, and you meant to say even in the next couple of hours instead of months.
Well, if I can go back and edit it to say that, I will. I need everything I can do to make me sound smart. And that would certainly make me look like a genius. But unfortunately, as it stands now, the record shows a couple of months and not a couple of minutes.
Yeah, no doubt at all. You and I had actually seen each other quite a bit this spring. We were at conferences together in Vancouver, Miami, and in Toronto. And, we've had lots of side conversations about gold and the precious metals, when they were going to break out, and that it was an inevitable breakout coming. But none of our conversations went down the road where we saw gold breaking out the way that it has since March.
Yeah, nobody saw this coming. And frankly, we've seen what many believe to be a very tepid reaction in the miners. They have leveraged the gold move, at least the majors, but not to any degree that we would have expected for this kind of move in gold. And I think the reason behind that is really twofold. One, this move has been absolutely stunning and shocking. No one saw it coming to this degree. And we're still in a state of shock and, don't know what to do about it. The other part of it is that we don't really understand the why of this move, what's really driving it. After a couple of weeks of the rally, we kind of figured out that it was central bank demand and Chinese demand. And Chinese demand was twofold. It was both the central bank, People's Bank of China, buying and domestic demand in China that were helping to drive the price. But that was fairly early on in this rally. And as this has continued, and importantly, as the gold price has rallied, even in the face of dollar strength and even in the face of rising treasury yields, two things that would absolutely drive the price into the ground previously they seem to actually be helping the gold price on a daily basis. So all of this, with this degree of buying, this degree of price insensitive buying, has led me to believe, and a few other people that I'm seeing out there, that there's something else going on. We're talking about insatiable demand on the order of hundreds of tons of gold that is coming into the market and buying programmatically, regardless of the price. And that's the mystery right now. We don't know exactly where that buying is coming from and what is motivating that buying. And because we don't really understand that, we don't have a good feeling. And I'm talking about the equity investors right now. We don't really have a good feeling of what the staying power is of these fundamental drivers. And therefore, we're nervous after all of the beatdowns that we've gotten over and over the past few years. Mining equity investors are hesitant to jump in head first into this market. So that's why we haven't gotten this kind of or the kind of response we would have normally expected. You know, if gold would have been rising because the Fed had pivoted and we saw another cascade of rate cuts ahead of us, people would be diving into this market. But because we're not sure why the buying is coming in, they're just too nervous, I think.
Yeah, I would agree with absolutely everything you said. And in fact, the puzzling thing is on the Fed side of things, if nothing more, they've actually signaled that there's just as likelihood of no rate cuts at all this year versus, well, they've long tempered past there was going to be 6 rate cuts down to, maybe 1 or 2 now. But, I would think it would be 50-50 either way. And in light of that, you wouldn't expect gold to be making the move that it's making.
Yeah, and it's rising in the face of that news as well. Now, I think they're going to have to cut rates, and it's the worst possible scenario for the Fed. They'll be forced to cut rates because of the effect of these high interest rates on debt resets that are coming due, not just for the U.S. government on a daily basis, but also commercial debt in the U.S., commercial debt internationally, and commercial real estate debt in the U.S. So that's coming. I like to term it a tsunami that's off on the horizon, but destined to hit the shores of the U.S. economy in the weeks ahead at this point. So I think the Fed is going to be forced to cut rates. And that scenario is the worst possible because they're going to have to cut rates when they have obviously not been able to kill off inflation. That's going to send an incredible message to the market. And maybe that's the message that the market is seeing right now. Maybe that's the reason for somebody somewhere or some group to be buying gold hand over fist right now.
Yeah, well, as I say, somebody's seeing something that the rest of us aren't. So you have to wonder. Gold generally pops off of geopolitical turmoil. And we certainly had more than our fair share of that in the last few months in the Middle East, particularly with Iran and Israel starting to take shots at one another. Is any of this due to that, or is it just kind of the market would shrug that off and is something else driving it?
I think, first off, I hate these geopolitical flashpoints for gold. I don't think there's any logical reason to buy gold because of troubles in the Mideast or anywhere else. Yet it does happen. But the reason why it happens is because people believe that the price is going to spike and they'll be able to sell it at a higher price to some other fool down the road. And that down the road is usually just a day or two. And anybody who tries to buy gold based on these geopolitical flashpoints and brush fires, they end up holding the bag. So it's not a reason to buy gold. It's certainly not a reason to buy gold over the long term. And we have plenty of other monetary reasons to buy gold. So I hate the whole geopolitical angle for investing in the metal. That said, we've had a couple of situations where on a daily basis, we've seen the price rise because there is an expected event in the Mideast. We saw that on, as we speak, the previous Friday when gold just soared $60 going into the weekend, but then was quickly taken down by someone piling on with shorts in the market to bring it down. It actually closed down $20 or $30. So, yeah, we've seen a bit of that, but I think that's just noise in the signal. The real signal here is one of monetary fundamentals and drivers, and that's really the reason to buy gold right now.
This time seems to be a little bit different. In the past few, for the lack of a better, well, no, it's the correct term. They were false breakouts. We're not sure about this one just yet, but the other precious metal, silver, really didn't follow gold, and the miners didn't really follow gold. Now, silver has made an aggressive move with gold this time. And the miners, although the bids are somewhat tepid, the miners seem to be getting a bid as well. So it looks like, we've thrown the alcohol in the punch bowl and we're ready for the party to begin.
Yeah, it's getting started. We've seen silver start to outperform gold, as we like to see in a long-term monetarily based bull market. If you look at the fact that we are about 6 weeks into this new bull run in gold, the first 2 weeks, silver did outperform gold. Then it took about 2 weeks off and really dramatically underperformed gold. Then the last third, the last couple of weeks, it's played catch up with some really tremendous gains and is showing a lot of strength. Kind of the same thing for the miners. The miners, though, if you look at the GDX, have been outperforming gold as we speak up until the last 3 or 4 days, and they've been underperforming gold in that period. And I think that might have to do some with the geopolitical issues and the underperformance of the broader equities markets. But generally speaking, yeah, that's the place to be. I've never been so bullish on the larger miners, the producers, as I am right now, because, wherever their costs of production, wherever the ASICs were, and there were a lot of concerns and arguments about that a month or two back, where our costs, production costs for these gold producers, wherever they were at the time, they're about $300 better today. And if you look at some of those producers, when their next quarterlies come out and next earnings reports, you are going to see numbers that the market, I don't think, can ignore. So I think they are really levered to this move, like especially the higher cost producers like Anglo Gold or Ashanti and the like. Those, I think, are great places to be right now, because they have yet to really move. But once those numbers come out, I think it's going to be dramatic, and we're going to see some dramatic re-ratings.
Yeah, like I'm looking at the miners, like Barrick issued dividends. When was the last time Barrick ever issued a dividend?
Yeah.
I'm seeing that Newmont's considering dividends as well. They're all buying back shares. There's great opportunities. They've got a whole lot of free cash flow now, but it's not reflecting in their stock prices to the same degree.
Yeah, it used to buy the miners for capital gains in a rising gold price environment. But if the market is not going to reward these producers with capital gains, with share price appreciation, they have to find some way to reward their shareholders and attract shareholders. And dividends are the most obvious way to do that. That's why we've seen some of these producers move in that direction. It is different. It is a different animal today, but I think that, well, it's a good thing that they're paying out dividends. I think those will actually increase as we see the earnings increase, but I think we're also going to have share price appreciation coming up in a fairly dramatic fashion.
Yeah, and we kind of alluded to this earlier in this conversation about what's holding it back, and I can only speak for myself, and I suspect that you'll tell me the same thing. But the biggest question I keep hearing over and over again is it real this time?
Yeah, and that gets back to what I'm saying, that there's a lot of doubt still, and understandably so, that if this gold bull is climbing a wall of worry, I think I'm supplying a lot of the bricks, because I'm concerned about it. Even though I understand all of the fundamental issues, even though I've been, no one has been more strident in their calls for an inevitable major monetarily based gold bull market because of these long-term issues. We are in the end game of a process that began in the early 1980s of ever easier money. And I've been saying that while this process is in its end game, I don't know whether it's going to be another crisis in Fed rescue effort before we see the end game play out, or another 2 or 3 of these kinds of cycles. I don't think anybody knows. But increasingly, as I see the gold price soaring because somebody is betting against the current monetary regime, I have a feeling that we may be in the terminal stages of this end game right now, that this level of gold buying may be a hedge against a monetary reset that for some, and a very deep-pocketed some out there, they see it as being imminent. And it may be. It may be. The world, the developed world, the developed economies are in a debt spiral. And the U.S., even though it is the issuer of the world reserve currency, seems to be at the lead of that parade down the drain. And so whether it's going to happen now, whether it's going to happen in 5 years, 10 or 15, this is a process. And it is one where you need to own gold and be positioned in this sector going forward, no matter what happens. But increasingly, I think there's a bit of, when you look at the buying that we're seeing now, it reeks of some degree of desperation. So something's up. And, I would not bet against the fact that reset is closer than we would have believed just a month or two ago.
Yeah, we talk about the Eastern buying, but there's a lack of Western buying, except it seems to be at Costco. Like Costco started selling these 1 ounce gold bars, and they couldn't keep them in stock. So that's telling me that there's an appetite to buy gold in the West, and perhaps the consumer just doesn't know how to do it.
Yeah, that's part of that. Is interesting. The reports I'm getting are still that we have not seen a whole lot of physical demand from the traditional coin dealer sources. And of course, the major Western gold ETFs, GLD in particular, their holdings were in the earlier stages of this bull run. Their holdings were actually dropping precipitously, and they haven't really soared much at all. They're kind of flatlined right now. So, yeah, I just don't think we've seen the Western investors jump in like we would have expected, because they're more trend following investors. They follow the price trend higher, buy more as the price rises. So it is very interesting. The Eastern buyers are typically bargain hunters. They buy on price declines, and they're not now. They're buying on price increases. That said, gold demand in India has fallen off severely because they are very price conscious, but that's been replaced in India by silver buying. And people don't appreciate the fact that India is perhaps the world's largest silver sink. They buy tremendous amounts of silver, and when the gold price rises, they tend to turn to silver, and that's helping to fuel the the rebound in silver prices a good bit.
Yeah, I laugh a little bit about the Costco thing because you realize in Canada they don't sell the 1 ounce gold bars; they're selling 1 ounce silver bars. So I don't know what it says about Canadian consumers that we're not good enough for the gold bars.
Well, you can't find them in the U.S. either, frankly. I mean, I'm a Costco member, and I can't find it listed on the website anywhere, no matter when I look or where I look. And I think that's largely because they just sell out.
Yeah, I truthfully have not seen one. In my head I imagine it with like the $1.50 hot dog and pop, stamped into the little bar. But that's just probably my vivid imagination more than anything else.
Yeah, well, it's not too many items at Costco that cost $2,500 or thereabouts that people are buying a lot of, and that's the amazing thing. And also, people who understand the market understand that these are skinny margins, even for Costco. It's hard to believe that they're even making money on this.
Yeah, I think it's just they've gotten a lot of publicity out of it. It's probably just a loss leader for them for the extra publicity they got. But hey, it was certainly an interesting move when they did it. My biggest concern about this current move is rooted in the seasonality. Typically, this isn't the time for the gold and the precious metals markets to be moving upwards. Usually, this is the time where they kind of they top off and then they go into the summer decline. Are we seeing a break in trend this year?
I think we're seeing a break in trend and in tradition everywhere. None of this buying is typical that we're seeing right now. It's not typical in terms of sources, degree, timing, anything. All of the rules are being broken. So the sell in May and go away, I think that's just another rule that's going to be ignored in this run. Again, we really don't know what's driving this. I just posted something on Twitter X today that it hit me this morning that a theme song for the gold market would be the old Buffalo Springfield song, For What It's Worth. There's something happening here. What it is ain't exactly clear. And that's it. That is absolutely it. Somebody somewhere is buying gold for reasons that we can't quite figure out. I mean, we can always come out. The list of potential reasons is as long as our arms. But which one? What is the driving factor? Is it something imminent? Is it just a play on the gold market, in the paper markets? Probably not, because we're seeing such strong demand and such strong price premiums in China. The premiums on gold withdrawals from the Shanghai Gold Exchange are great. The price there, domestic price there, is far above the price in the Western markets. And then a buyer there has to pay 12 or 14% VAT tax on top of that. So they are buying, and they're chasing the price higher. And that demand is seemingly insatiable. So, yeah, all the rules are being broken right now.
Yeah, it's as I say, it's different, and I'm reminded over and over what Rick Rule said to me probably about 6 or 7 years ago when we had one of these false breakouts. He said it was a false breakout. Because he said the next time the precious metals move for real, there'll be several months where it'll be a stealth bull market where it'll be happening, and outside of us that are really paying attention, nobody's going to notice. And it's kind of feels like that right now.
Yeah, it does. But what's interesting to me is that in typical bull runs, it's been those of us inside the market that have been among the last to recognize it or appreciate it. And the chart watchers, the technical analysts who have been watching the charts and gotten in before us. And because they weren't emotionally involved, they were also able to sell near the top. And that's kind of frustrating and been kind of frustrating that generalists have made a lot of the money in these moves when we follow it on a daily basis and have not been able to participate. But I don't see a lot of that right now. I don't see a lot of generalists. It is kind of a stealth market now. And therefore, maybe it's more for real, as you say, because of that. They just don't see a lot of publicity or buzz about it yet. If you watch CNBC, it took them weeks before they started to recognize that something was going on in gold. And at the beginning of their coverage, when they finally started to cover it, most of the coverage, the vast majority, was negative on gold. People saying, don't believe it, don't buy gold, with just a few rare exceptions here and there. Now they're kind of jumping on the train and realizing that something's going on. But the pat answer you see from a lot of these pundits, a lot of these talking heads in the major financial media, is they're chalking it up to geopolitical issues. Again, that's not it. That is not why gold is moving right now. And there are lots of fundamental reasons for gold to be moving right now. Primarily, I think the debt spiral that the world is facing right now, the fact that it can't go on at interest rates this high, and that we're going to go into another cycle of easier money, even while inflation is still raging. So it could be a replay of the 1970s happening right now, and some very big investors who are adjusting their strategic allocations to reflect that.
Yeah, we've, our common friend Chris Temple and we've been talking about his theory of the great stagflation light coming for quite a while, and it seems to be bearing out, just as you say. If we look forward into the gold market for the rest of the year, then, if seasonality is off the table, what do you think is going to happen?
Well, you have to look at what's been happening and project that into the future. We are literally in uncharted territory right now, but we're in a situation where, every dip is bought, where every rise is bought, and every factor that comes in, every development that would be negative or bearish for gold is instead bullish, and it is a rampaging, irresistible bull market right now. So at the very least, I think you can project that in the future. Now, as far as what and the why of this market, it looks like a lot of the buying is coming in on that kind of shadowy over-the-counter market globally, over-the-counter options market. It seems like some gold is being delivered actually via that market and via the ETFs, et cetera. So whether that buying is an options-related play that could end at some point very sharply, or whether it reflects deeper pools of demand for more fundamental reasons, which implies some level of central bank buying, I don't think anybody knows right now. So it is either one of those two options, I believe. If it's an options-related paper gold play to a very large extent, we could see a severe correction at any point. If it is the other option that reflects a deeper pool of more fundamental demand, portfolio allocation shifts globally, then it's going to go on for a while. And I think the Chinese demand and the premiums, the domestic premiums in China reflecting the level of that demand, I think that argues for that latter case, that it is more fundamental, more secular in nature, and will go on for a while.
Yeah. Prior to this last move, gold had been kind of trapped in boxes. You know, it had been trapped in that $1,900 to $2,000 box. And in January, I was having conversations with people that's, were, okay, are we out of that box and now in a $2,000 to $2,100 box? With 2000 being the new floor, and we had discussions there. So with this latest move, if gold, finds a level, where's the floor in the box, do you think?
Well, if you look fundamentally, I think the floor right now is, somewhere around 2,200 or thereabouts if we do have a stiff correction, because I think you'll see buying coming in on that dip by more of the speculators. Some of those speculators that we haven't seen come into the market have been waiting for an opening, for an entry point, and I think that would provide it. But the fundamental trends, one of the things you look at is not just price but time. As we get further down the road, we're going to see the factors, the drivers that we were originally looking for, being a Fed pivot, come more into focus. So we have gotten this far, this fast in the gold bull run without the big driver that we were expecting, the big catalyst that we were expecting, and that being a Fed pivot. Now they're talking, of course, about the Fed may not even be able to cut rates at all this year. Well, maybe they won't, but they're going to be in a world of trouble toward the end of this year when you see all of these debt resets and you see, the zombie companies that represented 20% of the large enterprises in the U.S. that were barely able to, or have been barely able to fund, to service their debts in a zeroed interest rate environment. All of a sudden, they are going to be forced to pay many times what they had been paying in debt service costs. They're going to fall by the wayside one after another. So that's a long way of saying the Fed is going to be forced to pivot for other reasons, whether inflation is killed off or not, whether they reach their 2% target on inflation or not. By the end of this year, they will be forced to cut for all of these other reasons. So that factor is still to come for gold. That's the kind of thing that investors will be able to see and recognize and know that it has staying power. And that's still to come.
So, and not to put words in your mouth, but if I'm hearing you correctly, you think that there's a better chance of more upside breakout than us testing to find out where the floor is.
Yeah, I think that's what the market's telling us on a daily basis. Yes, it's overbought, but the risk now, I think, is to the upside, because if you look into the motivations of this kind of buying, it tends to imply that there's something really big going on.
Yeah, most definitely. Now, at the very start of this conversation, I introduced you as the host of the New Orleans Investment Conference. It's the oldest running investment conference in North America. It's been going on
world now. The
world. Okay.
Yes.
So it's been going on, I think, upwards to about 50 years now with the previous owner of it before you stepped in upon their retirement. I love the event. First off, it's in New Orleans, which is one of my favorite places on the planet. But the level of insights and speakers that you get at this conference is beyond anything at any other conference I attend. And as you know, you and I get to go to an awful lot of events over the years. When is this year's event coming up, and have pre-registrations begun yet?
Yeah, it is the 50th anniversary of the New Orleans conference this year. So we've got a lot of special speakers and special events. It's all going to happen here in New Orleans from November 20th to 23rd. Our speaker roster is amazing. We have James Grant. I'm just looking at our listing in front of me. James Grant, Brent Johnson, Doug Casey, Dominic Frisby, Dave Collum, Danielle DiMartino Booth, George Gammon, Jim Stack, Peter Bookvar, Rick Rule, Lynn Alden, Tavi Costa, and many, many more, literally dozens more that I haven't touched on right here. It is the most enlightening and enjoyable of all the investment conferences out there. It is absolutely unique. And if you haven't been, I can talk to them blue in the face about why you need to go. Find somebody who's gone and ask them about it. The word of mouth is our best source of advertising for this event. And I just had somebody tell me the other day that they've never gone over all these years, and they're trying to go this year. But out of all the conferences that are talked about in the industry that they've heard about over the years, he has never heard a bad word about New Orleans, and only praise. And that's why he's coming this year. And he can't say that about any other event. You have to experience it. And if you're going to experience it, what better time than our special 50th anniversary celebration with the best speaker lineup of any event out there, and in the midst of what looks to be an historic secular bull market in precious metals and eventually mining stocks.
Yeah, well, it would seem appropriate with a gold bull market, you being the gold guy, this being the 50th golden anniversary of the conference. I think the planets are lining up, and people should flock and come to New Orleans this year.
Yeah, and I believe you'll have a link, but otherwise, NewOrleansConference.com is very easy for people to find us. It really is something that you'll be kicking yourself if you miss it this year. The opportunities to protect your wealth and to build it at this event, especially in the gold bull market, it's obvious and amazing.
The conference itself is held at the Hilton Riverside overlooking the Mississippi River. I would advise signing up earlier than later, because Brien's hotel room block has a tendency to disappear very quickly from this. So one should pre-plan to get the best deal as possible out there. So.
And I would advise people to use the link on our website to book at the Hilton, because you'll get a great rate on the room, but you want to stay in that hotel because it's very convenient. You take an elevator to all of the presentations and social events, and an elevator back to your room. And it's so conveniently located right next to the river, walking distance to the French Quarter, and many, many wonderful restaurants. So it's really the place to be.
Just in the lobby of that hotel is the famous Dragos. I recommend highly their char grilled oysters, the best thing you'll ever eat in your life.
Yeah, it's known as the best single bite of food in New Orleans, and it is literally steps away from all of the events at the conference. So you couldn't ask for anything better.
That's a beautiful thing. Thanks very much for joining me today. And as this bull market breaks up further, you and I are going to have plenty more to talk about.
You bet. Thanks, Michael. I really appreciate the opportunity.
The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.